Thanks, everyone. Hi, I'm Grace, and I do US tax consulting primarily, although I'm Canadian originally, and I live in Ireland at the minute. But I started out my career in the Big Four, doing US tax work for global mobility programs for big corporations. But I've recently transitioned into doing independent consulting. So while I come from a US tax background, I'm hoping to kind of give an overview of things that are relevant to everyone, because I know not everyone in the room will have any US tax issues, obviously. Right, so the objective for today, it's a very, very short amount of time to cover a complex topic, but just to give you guys an overview of what are the concepts that you need to be aware of, and how to manage your obligations and obviously remain compliant, because it's something that people have a lot of natural kind of stress and worry about. So just to give you an idea of what to look out for, really. And then what are some of the common myths and misconceptions? Because whenever I might look at some Facebook group or on Reddit, there's a lot of people giving each other advice, but it's not always very good advice. So I wanted to kind of clear up some of those things that I see out there. And then finally, just to give you sort of some things to keep in mind for when you should reach out for a qualified tax professional, because a lot of times simply Googling it is not going to give you really the detailed, specific advice that you need. So I'll talk about the concept of residency from a tax perspective. Again, talk about some of the common myths and misconceptions that I see, what constitutes work, and what is defined as a day of presence, and we hear these definitions sometimes, but I'll talk about kind of what they mean in a tax context. Talk about some treaty issues, because you may or may not know there are these double taxation treaties that are out there, but they're not sort of a magical cure-all for everything, so we'll kind of discuss what they can be used for and what they're not so good for. And obviously none of this is any specific tax advice for any of you, so please don't sue me. Right, so currently, unfortunately, tax laws are very old usually. They're on the books for years and years in countries, and they're not designed to reflect the current reality. And obviously we know that governments are slow to keep up with how we do business today. So unfortunately, it falls to each of us individually to remain compliant. So the way you do that is to just be aware of what issues are out there, and then again, know when to talk to somebody to advise you specifically. And unfortunately, it's not always clear or obvious where you might need to file a tax return. So again, just thinking, oh, well, I'm from here, so, or I'm living here, or I'm not living there, it's not always easy. And I'll talk about kind of specifically what I mean by that. So we might be familiar with this concept of most countries use a residency-based taxation. What it means is if you're considered a resident of that country, most often your worldwide income will fall into the scope of reporting in that country. So then it comes down to where are you considered a resident? And every single country has a different definition of what that means, and I have some examples that I'll go through for that. But it's not the same as being a resident for immigration purposes. So for example, someone might say, well, I don't have a legal resident permit for this country, so therefore I can't be considered a tax resident. That's not the case. And finally, one individual could simultaneously be considered a resident of more than one country at once. So what about this 183-day test that we hear about? And you may not have heard about it, but I hear about people kind of misquoting it a lot. So I thought it was worth talking about. Many countries would use some version of it, but each individual version of the 183-day test might look a little bit different. One of the things to be aware of is a country might have what we call a look-back provision, and it means it's not just the days in the current year that you need to be tracking, but they might look back and count a portion of or all of the days in a prior year as well. So I have an example of that from a US perspective and from an Irish perspective as well. And then, of course, not every country uses a calendar year from January to December. So if you're dealing with, for example, the UK, South Africa, Australia, each of those countries has their own fiscal year that is different. So the UK runs from April 6th to April 5th. South Africa is from February to March. India is another one that's non-calendar year. So just be aware that when you're counting your days, for example, it's not always just from January to December. And then a country might have another definition, such as ordinary residence or domicile. So for example, UK and Ireland both have these concepts as well. So you have to look at not just strict residency from counting days, but these are other definitions as well. So I just wanted to go through some examples of how different countries would define residency, just to highlight for you that it's not always a simple answer. So I come from a US tax background, as I said, and US tax is interesting for expats and digital nomads because, as many people may know, Americans never get out of the loop of US tax. They might live outside the US for 20, 30 years, and they still have to report their worldwide income every year. We'll consider you as a worldwide tax resident if you're a citizen, a green card holder, or if you meet this other third test. So that would be, it's 183 days, but it's if the sum of that exceeds 100% of the days in this tax year, plus a third of the days last year, and a sixth of the days in the year before. So it's really, I think the idea behind that is so you don't spend exactly 182 days and think you're getting out of the US tax net. Then, for example, the UK has this statutory residence test, which I won't go to the flow chart, but it's just to kind of highlight that you really have to answer all these questions and go down a kind of a logic tree to determine if you're even a resident of the UK. Ireland has a look-back test as well, so they count your current year, or you're a resident if you have a total of 280 days for this year and last year combined. Canada has a 183-day test, but it's not as important as the facts and circumstances. So for example, you could be considered a Canadian resident because your spouse remains in Canada, even though you don't live there anymore. Spain has a 183-day test, but they also have the concept of what's your center of vital interest. And interestingly, in Spain, there's no such thing as what we call a split year treatment. What it means is if you have 183 days, you're considered a resident for the whole year. You can't be considered a resident for part of the year and non-resident for part of the year. Thailand is one I just threw in there because I know a lot of people might spend some time in Chiang Mai. And it's interesting because they don't have 183, it's 180. So it's down to these small, minute details sometimes. And Colombia is one where it's 183 days, but it's not in a tax year or even in a calendar year. It's in any 365-day period. So it really gets down to granularity sometimes. So what's considered work or what's considered a day of presence? And I just put this here to highlight that sometimes we might think, well, I'm working remotely. Am I really working in a place? And most countries will consider that if you're physically standing on their soil and any kind of income is attributed to what you're doing today, that could be considered as income that's sourced to that country. And then what counts as a day, that's another thing that it's not as simple as you might think, because usually it's any part of a day, but different countries have different specific definitions of this as well. So in the US, it's considered a US day counting towards the 183-day test, except if it's a day in transit. So for example, if you're just having a stopover in the US between countries, or if you're a commuter from Canada or Mexico and you go back home every day, those don't count as US days. And then the UK has this idea of where you're present at midnight is considered a day in the UK. And then they have this small exception for days in transit as well. So now, with all of this being said, do you have to be considered a tax resident somewhere? And the answer is maybe, maybe not. So if you're not an American and you managed your days of presence carefully, it might transpire rather that you don't end up to be a tax resident anywhere in a given year. And that's very possible. But it's possible that you might also have a filing obligation even as a non-resident. For example, in the US, as a non-resident, if you have income that's above this kind of de minimis of 3,000 USD, you still have to report it. Or if you're from a country that doesn't have a treaty with the US, you will still have to report it. So is it okay to be a non-resident for tax purposes everywhere? Maybe. You might run into some issues at some point where why didn't you file a tax return anywhere? So for example, I could think of like if you're applying for a mortgage and they're looking for your tax return records. But once you're managing your days carefully and you can show that you're a non-resident everywhere, then that is a legitimate, I think, tax position to take. So I just put up some common myths and misconceptions that I've seen out there online. So a lot of people will ask questions about where they should register their company, and that's a valid question to ask. But I would highlight that it doesn't impact where you are a resident personally. So I registered my company. I have an e-residency in Estonia. That doesn't impact, if you spent 183 days in Spain, for example, you would still be a resident in Spain. And then, oh, well, I left my home country, so I don't have to pay taxes there. Again, that's not necessarily the case if you're not taking into right now, yeah. So what are these treaties? So they're agreements between countries. Not every country has one, and not every country has one with every other country. But if one does exist, what it's mostly useful for is determining where you should be taxed as a resident. So they have these tests that you go through, and it's kind of, you go step by step and you say, like, oftentimes it might be, where do you have a habitual abode, to determine kind of where the treaty thinks that you should be a resident. But be very careful if you're trying to look these treaties up yourself, because reading them at face value will oftentimes you won't get the answer that you think that you're getting, because they are complex legal documents and they have precedent and interpretations. So that's one area where I would highly advise, if you think that you need to rely on a treaty position, seek out a tax professional. And I'm not going to link to the link there, but it was just to show, the treaty between the US and Spain. It's, 50 pages or so, but that's the tip of the iceberg, because there's hundreds and hundreds of pages of precedent and thought and opinion on what those 50 pages say. So again, if you think you'll be considered a resident of more than one country, that's a red flag to seek out a tax professional, because you really want to be sure that if you're claiming a treaty position, you want to know that you have something solid to rely on there. If you need to file a tax return or tax reporting outside of your home country, get in contact with somebody from that country as soon as possible, because you might need to register for a tax identification number, and there might be other procedures that you need, so you can't wait until the week before the tax filing deadline. So really try and be proactive about that. And then if you have a change in your business structure or your income streams, or you're going to expect to be spending a lot more time in one place that you haven't before, that's again just to highlight, think about contacting somebody with expertise in that country. So what are your real takeaways that I think that you should move forward with? Know if and when you've broken residency in your home country. That's a really major one, because again, it's not as simple as, well, I moved out and therefore I don't have any reporting back home anymore. That's not the case. Keep track of the days that you spend in each country that you spend a lot of time in, just because, again, if you're getting close to triggering one of those thresholds, you want to be aware of that proactively, because it's always a lot easier to manage it in advance rather than look back and say, well, I wish I hadn't spent that extra week in Thailand or something. Be aware of triggers that could cause you to have a filing or reporting requirement, and know if anything is being reported on your behalf to any tax authorities. So this is increasing all the time, and I think it's an area that we should all kind of keep an eye on. Like, for example, I rent out my flat in Dublin on Airbnb whenever I travel, and I just got a notification saying Airbnb has reported that to the Irish tax authorities. So, okay, like, I'm gonna have to report that and figure that out, which is fine, but it's not out of the question that PayPal or other payment kind of facilitators might make reportings to countries. They might be required to. So if that's the case, just monitor that and don't kind of just delete those emails. Right, so that's pretty much it. I don't know I don't think there's time for questions right now, but I'm available to chat to anyone. I really don't know specifics, but I could talk to you about US tax if you wanted, or just tax in general. So thanks.